Hello and welcome. This is BQ Prime. I'm Agam Vakil and you're watching the F&O Show, a show in which we take you through all that is happening in the markets and the derivative side of things out there, specifically futures and options. As usual, let's start by taking a look at what's happening in the markets right now. At the moment, the Nifty is absolutely flat. So it's been a quiet Monday morning so far. And as far as the Bank Nifty is concerned, that too, while it has recovered from intraday lows, on an absolute basis, we're looking at a marginal red. But, in terms of the context as to what's happened over the previous couple of days, where we've seen a step forward, a step backward, and that said, we've still seen, a little bit of a recovery from the low of, as far as the Nifty goes around 19,300 from about 6 or 7 sessions ago. Currently, we're just shy of the 19,800 mark, but there still is a lot of uncertainty going in. As far as your options markets are concerned, let's also take a very quick look as to where there's a lot more activity. So starting off with the 19th October expiry, that is this coming week's expiry, for the Nifty, we have a lot of activity around the 19,800 and the 19,700 strikes, both calls and puts. In today's day of trade, of course, we are seeing a lot more writing around the 19,700 calls and puts. Naturally, it seems as though at the moment there are more and more traders who are writing those straddles at the 19,700 strike. Moving on to the Bank Nifty, here, once again, a lot more activity around the 44,200 mark. Do remember that there was a substantial amount of writing which came through on Friday at around the 46,000 mark and around the 45,500 marks. Now, I know that these levels are well far away from where we are currently trading at. That said, that you do know that traders at the moment are not exactly counting on the fact that the Bank Nifty may venture forth towards those levels over the span of the next 2 to 3 days. At least in today's day of trade, we're keeping an eye on 44,200 call and the 44,100 put, where we've seen a little more activity come through in terms of addition in open interest. So that's as far as how our markets are currently coming through. Let's get in an expert opinion on what they make of the markets and currently in terms of trends. We have Raj Deepak Singh. He is the derivatives head at ICICI Direct. Raj, good morning and thank you so much for joining in. Let's start by taking a look at the Nifty itself. What is your assessment in terms of what's happening in the derivatives market? And I believe you're playing options as far as the Nifty is concerned. Can you also take us through this particular call as well?
Morning, Raghav. Thanks for having me today. Well, in last 7 days, as you have mentioned, we have gradually moved from 19,300 to 19,800 sort of levels. And again, because of Friday's selling pressure, we have declined marginally. But throughout, I would say since mid of July, we haven't seen any major buying from FIs. Whatever we have seen is more of a short covering, which we have witnessed in last 7 sessions from 19,300 to 19,800. But on Friday's day, once again, there was some aggressive shorting. It has taken place throughout, particularly in the banking space. So I believe with the IT going into lackluster zone and banking is not performing, so it has to be from the other second status stocks which may come up in the picture and provide support to the market. But as of now, I don't see market moving much. So overall 19,600 to 850 sort of range, that's what we are looking at in the short term. So in that scenario, if one wants to write at ATM strike, that is 19,700 call and put. So at least from the short-term perspective, that should do well. And I believe that we need to bring up 160 sort of levels. So one can look at for the theta, to gain from the theta, because your IBs are also low. So whatever happened in the geopolitical scenario or your crude prices moving up, that hasn't impacted much, at least indices in concern, particularly Nifty. So I would go with the 19,700 call and put both writing with a stop loss somewhere close to 95 rupees.
Okay, well, that's an interesting view out here as Raj looks to sell the 19,700 call as well as the put at the moment. That said, well, you have an outright sell on the Bank Nifty, Raj. Can you take us through that as well? What is your assessment on the Bank Nifty?
Not exactly sell, but I have said that we have seen short build-up, particularly in banking space. And today we have the HDFC Bank result. So for sure, the 28% weight of HDFC Bank in Bank Nifty, that is going to be volatile. And also, Bank Nifty has relatively underperformed Nifty, if you see that, because this is the major contributor of the Nifty in terms of weight, and it has been the laggard for last couple of weeks. So until unless it is not moving below 43,800 levels, then perhaps current range-bound bias might continue. We are not looking from the positive sort of the move, and for us, any short covering expectation will be there if only if Bank Nifty starts moving beyond 44,600. As you have also mentioned just a few minutes back that there was heavy writing at 44,500 call and 45,500 call and 46,000 call strike. So until unless we don't see closure among those strikes, I believe it could be more of a limited upside in Bank Nifty. That's why we had recommended more of a sell puts than buying calls. Here we are not selling call option strikes because there is always an expectation of short covering. So on declines, one can look at selling 43,800 put with a small stop loss. So I believe that currently 43,800 put is trading around 80-85. So with a stop loss of 120, one can write it. And with just 2 days to settlement, day after tomorrow we have Bank Nifty settlement. So I believe theta will be come into picture here as well.
Right. Well, pardon me, Raj. I will just correct. Raj is looking to sell the Bank Nifty 43,800 put, and which means that well, he's looking to play off the theta decade coming through. And that said, let's also quickly take a look at what's happening in terms of stocks. And there is plenty happening because we actually have a lot of these IT counters which are abuzz. And of course, there's also a handful of tactical calls which are coming through from brokerages. But on the losing end, we have a lot of slabs, which is down around 2.3%, a little more active in terms of, as far as the losers are concerned. But on the advances, we have an MDC, which is up around 2.8%. Polycap continuing its up move, that's up around 2%, and Canara Bank advancing by around 1.7%. So we're seeing longs building into a handful of these counters. That said, Raj, why don't you take us through your stock calls for today? How are you viewing those, and how would you play them?
In last few days, what we have witnessed that it is more of a stock-specific move, and apart from technology and banking, there are two sectors which have significantly outperformed the market. One I would place pharma, and another one is cement. And in pharma names, if you just avoid a couple of names because of the news flow of that Cipla buying, either by Dr. Reddy or Torrent Power or the consortium. But if you avoid those stocks, and across the board, pharma names have significantly outperformed. So here I have picked IPCA Lab as our derivatives pick for the week. And what happened that in last 1 month or so, stock has been consolidating. And meanwhile, what we had seen that there was humongous call writing at ATM strikes. So on Friday as well as today, what we are witnessing that closer at ATM call strike. Along with that, you will see there is continued closure in the future segment. So perhaps stock is on the verge of a fresh breakout. And in that scenario, moving to 4-figure is the likely scenario for the IPCA Lab. So that's why we are a bit bullish on IPCA Lab. And similarly, in the cement pack, I would bet on the heavyweight index heavyweight Ultratech cement. So because of continued FPI selling, the stock has came down. But overall, the put base, which was close to 8,000, that has remained intact. And now the stock has started trading beyond its call writing. That was we have seen somewhere close to 8,300 strike as well as at 8,400 strike. So perhaps in the entire cement pack as well as Ultratech cement. So we believe that the stock is in a fresh uptrend. And when your technology and banking, they are taking a back seat. So as I have said in the starting that might be the other sectors which will come into the picture. And right now it seems like cement and auto. So in cement, we are taking Ultratech cement for the target of somewhere close to 8,800 levels in the short term.
Okay, well, those are views coming in from Raj with respect to, well, not only the benchmark indices, but stocks as well. At the moment, we have the Nifty coming in at around 19,750, a little above that. And the Bank Nifty has once again dipped below the mark of 44,400. So there certainly is a little bit of, well, marginal weakness as far as the Bank Nifty is concerned. But all in all, both indices flat. And on that note, Raj, I'd like to thank you for taking the time out and speaking to us and taking us through your views on the markets as well. And we'll be signing out for now, but there's lots more lined up on BQ Prime. So stay tuned and we will keep bringing you more.